Hi students, so this lecture for BBA 4th sem on corporate accounting second. In the last class we saw the problems on it means we used for that problem we used the both the methods, which is that amalgamation in the nature of merger as well as amalgamation in the nature of purchase. Okay, so just only you have to know what's the difference between the merger and the what's the purchase. For the merger methods, if the all the whatever I explained in the last class means conditions, if it is that fulfilled, then it will be the amalgamation in the nature of merger. If it is any one of the not satisfied the conditions, then it will be what's the merger in amalgamation in the nature of purchase. Okay, so and one more basic is basic difference is there, which is that it means there are three steps are there to solve the problem on that. So for there are three steps. Which are those three steps? First one is a calculate the purchase consideration, and it is common for the purchase method as well as the merger methods. Okay, in the purchase method also you have to calculate, in the merger method also you have to calculate. Okay, next the closing entries in the books of the transferor company. Okay, so it is also common for both the methods, for the merger method and the what purchase methods. Common you can prepare one only. Okay, next third one is what's the opening entries in the books of the transferee company. Okay, so in the merger methods you have to solve in a different way, and in a purchase methods you have to solve in a different way. Okay, this is the basic differences there so to solve the problems. So now one more problem we will see on this. Okay, so see here, the following are the balance sheet of A Limited and B Limited as on 31st/3/2015, on which date they have agreed to amalgamate and form a new company called C Limited. The C Limited is incorporated with an authorized capital of rupees 2 lakh divided into 20,000 equity shares of rupees 10 each. Okay, so now see, this is the A Limited and the B Limited, and they are going to amalgamate into C company. They are forming the new company, which is the C company. Okay, and the C company's authorized capital is rupees 2 lakh. Okay, so while calculating the, it means while calculating in the balance sheet, okay, so it is not consider. Okay, it only the showing the as a authorized capital, but while calculating it is doesn't matter. Okay, so now this is the balance sheet of the A Limited and the B Limited. The equity and the liabilities. Okay, so 60,000 of the A Limited, and for the B Limited is rupees 64,000. Okay, so next assets, for the assets of A Limited is 60,000 and B Limited is a 64,000. so this note is given. So notes under this here, for the reserve and surplus note is there, tangible fixed asset purpose notes is there. So prepare the amalgamated balance sheet. The pooling interest method is followed because the amalgamation is in the nature of merger. Okay, so we have to use this amalgamation in the nature of merger, and in this, with the help of this problem only, we have to prepare what's the balance sheet. Okay, for that purpose, first of all we have to calculate what the purchase consideration. So now see how to calculate the purchase consideration. Here it's not given the lump sum method, but here it's we have to use which method? The net asset method. And you know that how to calculate the purchase consideration under the net assets method. So total assets minus what's the outside liabilities. Okay, so now see the for the calculation of the purchase consideration, what's the total assets here is given. For the A Limited is 60,000 and for B Limited is 64,000. Now see which are those outside liabilities are there in the balance sheet. So this equity and liabilities, shareholders funds, they like the share capital and the reserve and surplus, these are not the outside liabilities, but only the current liabilities, which is the trade payable in bracket the creditors. This is nothing but the outside liabilities. Okay, and so this you have to minus from this total assets of the A Limited as well as the B Limited. Okay, so now see the solution in computation of the purchase considerations. The total assets for the A Limited is 60,000 and for B Limited is a 64,000 less outside liabilities in bracket creditors for the A Limited from the balance sheet. from the A limited is 12,000 and B limited is at 12,000. Remaining amount is what? 648,000 and 52,000. So this is nothing but the purchase consideration. So now this, while preparing the balance sheet, okay, common balance sheet for the C limited at that time, so this whatever this purchase considerations, these purchase considerations we have to convert into shares, okay, and each share price is rupees 10. So now this is the 48,000 share capital for the A limited, and B for the B limited is of 52,000. So the each share price is rupees 10. Then how it will be the shares? 4,800 shares for the A limited and 5,200 shares for the B limited. Okay, so like this we have to prepare the shares. Now see how to prepare. Only we have to prepare the balance sheet in this with the help of this information. See this balance sheet, amalgamated balance sheet as on 31st 2013. Equity and liabilities, shareholders fund, share capital, note number 1, rupees 1 lakh. So now how it came 1 lakh? Here note is given. So see here, share capital, authorized capital is 20,000, equity shares of rupees 10 is rupees 1 lakh. Okay, so it is authorized capital, it doesn't matter. So but paid up share capital, subscribed and paid up share capital, 10,000 shares are there. How it's a 10,000 shares? 4,800 shares plus 5,200 shares. Okay, so whatever these purchase considerations we calculated, so this purchase consideration answer is A limited 48,000, B limited 52,000. so this it is converted into shares. So each share price is rupees 10, then 4,800 shares of the A limited and 5,200 shares of the B limited. Okay, so the total will be the 10,000 shares and 10 rupees each. Okay, so 10,000 into 10, it's rupees 1 lakh. Okay, so this is the 1 lakh of the share capital. Next, reserve and surplus. So see in the reserve and surplus in the balance sheet, reserve and surplus, A's reserve is rupees 8,000 and B's rupees minus 8,000. Okay, so it's a nil, it will be just showing the 0. Okay, so see here, it's new reserve and surplus, it's showing the nil. Okay, next, trade payable, note number 2, which is the 24,000. It means how it came the 24,000? A's trade payable and the B's trade payable, it's a 12,000 plus 12,000, it's a 24,000. So see here, note number 2, trade payables, creditors 12,000 from the A limited, 12,000 from the B limited. The total is what? 24,000. Next, the total, make it total of the equity and liabilities, it's a 1 lakh plus 24,000, it's a 1 lakh 24,000 of the equity and liabilities. Now see the assets, tangible fixed assets, you have to make the combine. Okay, just we have to make the combine. So non-current assets, in that tangible fixed assets, so see here, tangible fixed assets, building and machinery, and building it's 30,000 plus 37,000 and machinery 12,000 plus 20,000, it's a 40,000 and 57,000. Make it common and take it, it's a what's 99,000. Okay, intangible fixed asset, it's a goodwill, there is a nil, there is a no any note. Okay, only 4,000 directly as it is you have to take. Inventories, stock, just you have to make the combined 10,000. Trade receivable, note number 5,000 and cash and cash equivalent, it says note number 6, it's a 6,000. Here also the asset is 1,24,000. Okay, so all the note is given here, so there is no need to get the confused. Okay, so just see this note number, you will understand how it came the values in the new balance sheet. Okay, so I hope you will be understands, and I hope all of you got the message from the college. It means you have to give the internal exam on 7th, 8th and the 9th July. Okay, so be prepared with this, and all of you note down the problem. So I'm not going to send the problems, just we have to see the lectures and note down the problems. Okay, so I will send you the notes today, just see that and do the study. Okay, so thank you.